Hi, this is Lara at Elliott Wave Stock Market with a long-term technical analysis of the indices, the Dow Industrials, Transportations and the S&P500. I'm going to have a look at the monthly charts, looking at the last two bear markets, the bull market in between and the current bull market. Let's have a look at the health of these markets. Let's make that a lot bigger. First, here we go. So this is the Dow Jones Industrial Index. This is using stock charts data. This data I've got on the monthly chart is only going back to 1999, end of 1998. I'm looking at a few indices here. First of all, I'm looking at volume, and I like on-balance volume. It works particularly well with trend lines. I'm going to use RSI and I'm going to use ADX. So I'm going to keep it quite simple. On price, I'm going to use trend lines. These pink lines on price indicate divergence between price and RSI at market peaks and market lows. Let's have a look at this bull market and this bull market first for the industrials in terms of volume. This bull market from this point to this point saw a reasonable increase in volume as price moved higher. In order for a bull market to be strong and healthy, it needs the increased participation of buyers in order to keep pushing price higher, and that's what we had for this bull market. It was a relatively healthy bull market. Compare that to this current bull market, which is longer lasting but obviously has fairly consistently declining volume. It has a little bit of a fluctuation, but overall the pattern from the start of this bull market back in March 2009 to the current day sees overall declining volume as prices moving higher. Now this has persisted for some years at this stage for the industrials, transportations less clearly, and a little bit more clearly the S&P500. So it certainly could continue for longer. What I think this is telling us is to be alert for an end to this bull market, and when the next bear market comes, it may be more strong and possibly even quite swift compared to prior bear markets. It looks like something big might be brewing, but this is not going to be helpful at all in market timing, unfortunately. Let's have a look at on-balance volume, and like I said, it works fairly well with trend lines. We've got a reasonably long-held trend line here. This was previously resistance, and then it provided support. So a break above this trend line here, remember this is at the monthly chart level, so this goes back into early 2015. A break here was a bullish signal, and then a retest of that line with on-balance volume now moving up and away is another bullish signal. So that supports the rise in price. It gives us a bullish signal. It tells us the market is more likely to keep moving upward at this time. If we saw a break below this purple line, that would be a bearish signal. We have not had that yet. Let's have a look at RSI. This can be helpful in not timing but warning of impending trend changes, this divergence between price and RSI. We saw that at the end of this last great bull market, which ended in 2000. We had actually it's double if you count this one here. We had double divergence between price and RSI as price made its final high. This actually goes further back off to the left of the chart, and further off to the left of the chart it spanned a total of 30 months for the industrials. So this divergence can develop into multiple divergence, and it can span years before price turns. That's why I say it's of no use in timing, but it does give us a warning in advance that a trend is getting weaker. This bear market saw no divergence at the end with price and RSI didn't even quite manage to reach into oversold for the industrials. So it's not always going to give us warning of a turn, just often it does. In this case, it didn't. So we have to use a combination of other technicals as well. At the end of this relatively short span bull market ending in October 2007, we only had single 3-month divergence between price and RSI before price finally turned. Compare that to this prior end of this bull market where the divergence, which is further off to the left of the chart, spanned a total of 30 months. So the message that we're getting here is if we see divergence, it's a warning that the trend is weakening, but it's not going to be helpful at all in market timing. It's just a warning telling us to be alert and cautious. At the end of this bear market, however, we saw only single month divergence. RSI was deep into oversold, and in this month, price made a new low, but RSI moved upward. price also closed with a big green monthly candlestick with a very long lower wick, and so that was also quite bullish. So that would have warned that we were fairly likely to have the end of this bear market, this is during the global financial crisis, close to, if not at the end there. Again, it couldn't have been particularly useful in accurate timing. That's not how we're working it, how we should work with it, but it was a strong warning that the bear market was coming to an end, and that's where it did end. We've now got multi-month divergence going back to, I think this is November 2014, between price and RSI, and RSI has failed to reach back into overbought, even though price is making new all-time highs. Now this, again, as we've learned, cannot tell us that the bull market must end here, but it is a warning of current weakness in this bull market. It's likely that it's going to end, I can't even really say when, within another year or two. It could even take longer. We just need to watch out for other signs of weakness, and when we get a combination of different technical indicators all giving us strong signs of weakness, then we get to be very, very cautious indeed. So this, along with declining volume, this single divergence at the monthly chart level between price and RSI, tells us that there is some weakness at this time in this market at the monthly chart level. Let's have a look at ADX. We can use this as well in conjunction with our other indicators to tell us about the health of the market currently. When the black ADX line is above both the positive and negative directional lines, that tells us the trend is extreme. I've added a yellow line here at 35 that also, when the black ADX line is above that, tells us also the trend is very extreme. And if we get a combination of both situations with the black ADX line above 35 and above both the positive and negative directional lines, that tells us the trend is very extreme and it's likely to end quite soon. That's what we had at the end of the dot-com crash. This point down here, it told us we had a very extreme downward trend, downward because the negative DX line is above the positive. The trend is extreme because ADX is above 35 and above both directional indicators. And as soon as it moved above the negative directional indicator, that was pretty much shortly after where that bear market ended. At the end of this bull market, what was ADX doing at the monthly chart level? In this month, the very month I think before that bull market ended, ADX had just moved above both positive and negative directional indicators, but it was not above 35, so we had one indication that the trend was extreme, but not two from ADX, and that was when the bull market ended. So again, we should be using all of these things in conjunction. When we get a cluster of technicals telling us that there's weakness, then we should be very, very alert and cautious indeed. At this point here, we had divergence with RSI. We had increasing volume. We had a little bit of decline in volume in the last 3 months here, but we had that before in this bull market, yet price continued higher. So that was just another little indicator that we may be getting the end of this bull market here. We had single divergence here, and we had an extreme reading from ADX, but it could have been even more extreme. So that was a warning that things were starting to get very extreme, and that was the beginning of the global financial crisis, which ended down here. What happened here with ADX? It was above 35 and above both directional indicators, so very extreme indeed. RSI was deep into oversold, and then it showed that single month divergence, and we had a support in volume for the fall in price down to the last low, and then we got this very bullish monthly candlestick here with a very long lower wick closing well back into the prior month candlestick real body. So all of those indicators together would have told us to be very, very alert for an end to this global financial crisis. So what's the situation today with this combination of indicators? We've got single divergence RSI, we've got declining volume, which we didn't have for either of those last markets. We've got a bullish signal though from on-balance volume. I give this one quite a lot of weight. What's ADX doing? It's quite the opposite to the end of the last two bull markets. It's not extreme, it's actually for this only just above 15. I use the guidelines for ADX as given in Kirkpatrick and Delquist. If ADX rises above 15, it indicates that we're in the early stages of a trend. So after we had this big correction here, ADX is telling us now we're in the early stages of an upward trend. It's just above 15, just starting to rise for the industrials. The trend is upward because the positive directional line is above the negative. This is nowhere near extreme at all. This is quite a different picture to this picture here and this picture back here at the end of that bull market in 2000. And so if ADX also becomes extreme and RSI develops further into multiple divergence, if we see a bearish indicator from on-balance volume with a breach of support, if those things happen together as a cluster, then I would be much more alert for an end to this bull market. But at this time, ADX is telling us that this trend is likely in its early stages. That doesn't mean that's what has to happen. It just tells us on balance of probability, good things are more likely to happen at this time for the industrials. Let's have a look at the transportation index. What do we see there? I'm taking kind of a Dow theory approach and looking at all of these three together. This is not Dow theory, but the theory is to have a look at all of these three industrials, transportations, and I add the S&P 500 because that's the one I analyse every day, and look at the health of all of them. If we see a combination of strength or a combination of weakness in all three, then the balance of probability will change. So how are the industrials doing? I've added these purple trend lines to the industrials. This is the approach outlined by McGee in that classic Technical Analysis of Stock Trends, one of my favourite technical analysis books. For a bear market, draw the trend line from the start of the bear market to the first major high within it. Extend it on out. I'm doing this on a log scale with stock charts data. For a bull market, you draw the trend line from the first two major lows within it and extend it on out. This trend line is really, really simple, and it's used to confirm or provide confidence of a major trend change from bull to bear or vice versa. At this point here, with this strong month breaking above and closing well above the trend line, we could have had an indication that the bear market was likely over, but we also could have had it on this month, and then the next month price turned back below. So it's not always going to be a perfect system. Nothing in technical analysis is going to be perfect, but used in conjunction with other indicators, it's another piece of information to take into account. For this bull market, it didn't work perfectly either, but it did work reasonably well. We got a break below the trend line here telling us that the bull market was likely over, but then we got a final new all-time high. We had a back test to find resistance at that line, and that was the end of the bull market and the beginning of the global financial crisis, and quite a strong, sustained bear market. For this bear market, drawing the trend line across the start to the first major high within it, we wouldn't have had this trend line tell us the bear market was over properly until this month here, and then price found some support fairly close to that line before moving up and away. At that stage, price had retraced well over half of the previous decline, so this signal was coming quite late. It would have been a final piece of information to tell us that this bull market was likely to be more sustained and healthy. For this current bull market, I'm drawing a McGee trend line from these two very big strong lows. If this line is breached by downward movement, and if other technical indicators tell us it's likely that the Dow is in a bear market, then I would use this as some further confidence of that analysis. Let's have a look at volume. For this bear market, we had overall a decline in volume from the beginning to the end, although from this point here, you could say that you possibly may have seen some increase in volume. It's not really very clear. But overall, for most of this market, price was falling of its own weight. For this bull market, we had a reasonably sustained increase in volume toward the end of it. And so the rise in price was supported by an increase in buying activity compared to this current bull market, like the industrials, the transportations, overall are seeing mostly a decline in volume as price continues to move higher. And so there's something suspicious about this bull market. It's lacking a sustained activity from buyers. Price is mostly floating upward with the activity of a relatively small portion of the market, and so it's not in the very long term sustainable. I think this points to eventually, when this bull market ends, the following bear market may be quite swift and strong. For the transportations, I'm drawing this long-term support line here on balance volume. I've tried to play with shorter term lines around this piece of movement. It just doesn't really work. If this trend line is breached properly by a move by on balance volume below it, that would be a reasonable bearish signal. It wouldn't be a strong signal though, because the line's only been tested twice, but it's very long held. I've drawn some pink trend lines here to show divergence between price. It made a new low here. We had divergence between price and RSI, although RSI didn't reach oversold for the end of this bear market. We had divergence at the end of this bull market between price and RSI as price found a final high. And this was double divergence, and this was a failure swing. We had the final high in price while RSI failed to reach up into overbought, and so that final signal, along with price finding resistance at this trend line, was a fairly strong indicator of an end of that bull market. We didn't have any divergence at the end of this bear market between price and RSI. At this stage in time, we do have some very strong and long-held divergence between price and RSI. That, in conjunction with declining volume, is telling us that there is some weakness within this market. But what's ADX telling us? ADX for the transportations is the most bearish of all of these three markets. The black line is still declining, and it's above both the directional lines. So it tells us that the trend was very extreme at this point here, and now it's telling us that the market is currently not trending for the very long term, that it's more likely consolidating. But this is a lagging indicator. It's based on a 14-period average, in this case a 14-month average. This is a very long-term look for investors. This is not useful at all for day traders. And this is telling us that ADX is still relatively extreme for the transportations. Now, if the black ADX line turns up, then it would be telling us that we have again an extreme upward trend at this stage. We've only just recently, relatively, had a signal of a trend change from ADX as a positive line crossed above the negative. So at this stage, if ADX turns up, it's telling us we've got an upward trend. If it turns up and moves above 35, I would be very, very cautious indeed and looking for an end to upward movement in the end of this bull market. What have we got for the S&P? At the monthly chart level, this bear market came with a reasonable increase in volume. This bull market also came with a fairly steady increase in volume, and so the rise in price here had support from volume. This bear market also came with an increase in volume, but compared to all of those, this current bull market has an overall decline in volume. Volume is still overall relatively low from the previous start of this bull market, which began on this month here in March 2009. So again, a lack of activity from buyers. Prices just drifting higher with the activity of a relatively small number of buyers in this market. That tells us that long term this trend is not particularly healthy, nor it is going to be sustainable, but it has, to be honest, it has been sustained for quite some years. I think what this is pointing to is something, it's a warning that eventually, when we do have the next bear market, it may be more likely to be stronger and faster than previous bear markets. It looks like something big might be brewing, but not here yet. The S&P, I've drawn this little box pattern around this big sideways movement that lasted, I think this is 27 months. It's only been out of the box. It broke out here in July 2016 on this candlestick, and it's only been out for 6 months. The longer price remains within a box, the more time-consuming and sustained the following breakout should be expected to be. So it's only lasted 6 months. It's quite reasonable to expect it's fairly likely to continue for some more time. I've played with the McGee trend lines for the S&P 500 and they just don't really work very well. I'm going to use this trend line here on the S&P 500 as a warning. If price breaks below this long-term trend line at the monthly chart level, that would be a warning that something bigger might be happening. So far, price remains comfortably above that trend line. At the end of this bull market back here, we had triple divergence. This actually goes back further off to the left of the chart, but I don't want to squash the chart too much more. And finally, at the final high, we had a failure swing. That was the final piece of information from RSI to tell us we had a final high in place. We didn't see bullish divergence at the end of this bear market. RSI only just managed to dip into oversold. There was no divergence there. At the end of this bear market, we did have some single month divergence again, and we had again this very bullish candlestick. The real body of this candlestick closes well into the real body of this candlestick, and it has a long lower wick. That's quite bullish at the monthly chart level. That, in conjunction with single divergence from RSI, was a strong warning that this bear market may likely be coming to an end. What do we have at the current time? We've got new all-time highs this month from the S&P, and we've also got some strong multi-month divergence with RSI. And so again, along with an overall decline in volume, that's telling us there is internally some weakness to this bull market. It tells us to be cautious, it tells us to be alert, but it is not going to be useful in timing the end of it. On balance, volume isn't as clear as it is for the industrials for the S&P, but I've drawn this purple resistance line here pretty much in the same way. It had a little dip below, and now it's moved back above, so that's a reasonable bullish signal. The line's almost horizontal. It's been tested multiple times, but the test almost failed here. There's a bit of leeway in exactly how this line is drawn, but I have drawn it most conservatively here, and we do have a bullish signal here. So along with the expectations after price moving out of this long-term box, I'll expect a continuation of upward movement at this stage. And what's ADX telling us for the S&P? What did it tell us at the end of the last two bull markets? Back at this high here, ADX was very extreme. It had reached above 45. That's very, very extreme, and it had been declining for some time. The positive DX line was still above the negative, but the black ADX line was above 35 and above both of the directional lines. That's very extreme indeed, and it was declining, not increasing. That tells us that the market is more likely moving into either a consolidation or a trend change. At the end of this last bull market, back up here, what was ADX telling us? It had only just moved above the positive directional line and negative directional line in the final month of the bull market, but it wasn't above 35, so it was giving us one signal that the trend was becoming extreme, but not very extreme, because it still didn't reach above 35, but that's where that bull market ended. So how can we compare these two situations with ADX with the current day? They're very, very different indeed. ADX for the S&P is just below 15. Now those guidelines from Kirkpatrick and Dalquist say when ADX reaches above 15 that the market may be in the early stages of a trend. It's getting pretty close. If we see another upward month, it may very well move above 15. When the black ADX line is below both the directional lines and the black ADX line is increasing, then the trend is in the early stages, and it's relatively young and should be expected to continue for some time. It is not extreme. So at this stage, after this big time-consuming 27-month consolidation, we now have a relatively young new trend that should be expected to continue for many months yet. But we do have a warning that eventually this bull market will end. We have a warning that there's some underlying weakness from volume and from RSI to tell us that eventually when it does end, the next bear market may begin very strongly. It could be very deep and very strong, but it is not here yet. That's the conclusion that I have from looking at those long-term monthly charts for both of those three indices. That's all from me with an extra video update for you. If you would like to find daily S&P 500 Elliott Wave and technical analysis, you'll find it in the membership area of my website, Elliott Wave Stock Market.